If you have 10 different tabs open right now trying to compare payment processors, I see you. Here's the frustrating reality. Every single website you come across from these companies claims to have the most competitive rate. And yet not a single one of them can tell you what your monthly bill is actually going to be. And so if you're feeling burnt out from this cycle of research, conjecture, and comparison, you're not alone. Today, I'm not going to give you a magic pill for deciding which payment provider is right for your business. But what I am going to do is expose the 3 specific traps that these companies use to hide the real costs from prospective buyers, making you a more informed decision maker. And on top of that, I'm going to show you a resource that our team has made that compiles all the top payment processors in one place, so that you don't have to do that work yourself. Let's get into it. The first trap is fixating too much on one advertised rate. Our minds appreciate simplicity. And so what's the first question we typically ask? Well, what's your rate? And lo and behold, what do we find on that company's website? A simple single rate that our eyes are immediately drawn to. Maybe we're thinking, okay, if I just multiply my monthly sales by this single percentage, I'll know roughly how much I'm paying in fees, right? Not quite. There's actually more going on here. We're only seeing the tip of the iceberg with this single rate. Because behind the scenes, it's not like there's one rate for processing payments. The banks that issue your customers' cards, they actually charge many different types of fees dependent on payment method. And even though you might not see what these fees are off the bat, you end up paying them in one way or another. These are the ones to look out for. So first you have in-person rates. So these are the ones that you'll most commonly see right at the top of that website page. Why? Because they're on the lower end of credit card fees. But we're not going to stop here, because next we have online rates. Now these are often grouped in with keyed-in rates. So these ones as a whole are higher than the in-person ones, because from the bank's point of view, these transactions are riskier. And so if you're selling things on an online store, guess what? You're already paying more than you originally thought. After that, we have debit rates. So debit rates should typically be lower than credit card rates, but they aren't always. Some providers will have a debit specific rate, whereas others will charge the same rate as they would for credit cards. So just be wary of which one you're looking at. And then finally, you have ACH rates. So because this type of transfer goes straight from bank to bank, they should be much cheaper to process. But again, not all processors will charge the same for ACH. You'll actually see that percentage fluctuate. The point is, that rate you see listed on that first pricing page you find only tells part of the story. And your real monthly bill in terms of fees depends entirely on how your customers pay you. Now, trying to track 5 different rates across multiple different websites sounds like a nightmare. That's why we did it for you with our price comparison PDF. So this guide compares 20 of the most well-known payment processors across all the dimensions that we discussed just now, based on real pricing data that we gathered and researched from those companies' websites. It's all collected in one place for you and is completely free. So click the link below to start your comparisons today. The second trap is unknowingly walking into a hostage situation with your new payment provider. I'm sorry, that was super dramatic. What I mean is getting locked into a monthly subscription plan or contract with a payment processor. So processors will sell monthly subscription plans based on the premise that you'll be getting additional value for them. So for example, access to lower transaction fees, or a more impressive suite of payment tools, or like we mentioned earlier, free hardware. But before you sign on that line, make sure you understand what the trade-offs are. For example, watch out for auto-renewals and early termination fees. These will keep you and your processor joined at the hip for longer than you anticipate. Now these are problematic because in that span of time, they might even slowly raise your rates. And since you're penalized for switching, you may just decide to swallow that cost and watch as it eats away at your margins. And guess what? Over a long enough time, this free hardware that you got might actually end up costing you twice as much as you would have paid if you bought it outright. Because if you pay a $30 a month fee, over the course of 2 years, you'll end up paying $720. That's a lot to pay for a terminal that was only worth $300 to begin with. Now, admittedly, those of us who are optimists can often deceive ourselves because we think that things are always going to go well. when in actuality, things do go wrong. And when that does happen, that's when our choice in partner seems to matter the most. And so this is our third trap, being blindsided by penalties. Now, chargebacks are a reality in many industries and occur when a customer goes to their bank to try and dispute a transaction they had with you. The primary risk here is that you might be liable for refunding that money. Now, what people often miss is that there's a chargeback fee as well. This can vary widely across processors, but are usually anywhere from $15 to $50 per chargeback. Now, some processors will refund this amount if you win the dispute. This is more fair, because if the chargeback was filed wrongly in the first place, why should you have to pay? Other processors might keep this fee regardless. So the point is, in your hunt, make sure you understand what that company's policy on chargeback fees is. PCI compliance is a set of rules that businesses have to follow when processing credit card data. Now, some payment processors will actually help their clients through this by giving them a questionnaire that's user-friendly to help fulfill that requirement. But others will actually just quietly charge a penalty for not being compliant until you find out how to do it yourself. This could be anywhere from $20 to $50. So again, check the company's policy on PCI compliance before you pull that trigger. So above being charged these fees, another thing to factor in is your ability to reach someone for help when things do go wrong. Because the ultimate penalty is having your system be down for a day, or your funds held for too long, just because you couldn't find an actual human to talk to. And so before you commit, make sure you look at reviews from other business owners about this specifically. How easy was it for them to find help when they needed it? At the end of the day, choosing a payment processor is a very personal thing. There's already so much to think about, like what technology you'll need to make your integrations work, how you're gonna migrate your customers' data over, and in a more vain way, what terminal looks best on your countertop. But the key thing is not to lose sight of these traps that we discussed in the video, because they're just not as obvious and easy to miss. The last thing we want is for you to look up in a year and regret the choice that you made. This is why we made our comprehensive pricing guide that we talked about earlier. Our team compiled and researched this so that you don't have to spend hours going through different websites trying to find a clear comparison. And so if you want this free guide, simply click the link below.